I asked you what you're starting with the most, and this was the answer. So I'm going to show you how I look for confirmations without falling into a false idea of having to refine a level over and over again. The problem is when we have multiple different time frame structures and we mix them without exactly knowing when price is actually ready to reverse or continue the trend. Before we get deep into how to look for a perfect confirmation to enter our trades, I want to do a quick review on where to look for these confirmations. So first of all, you need a higher time frame bias, and based on the higher time frame bias, you need to select your point of interest. Essentially for when price gets to a level where we know smart money accumulated shorts from, in the case of a downtrend. So for example, if we look here to our left, we have a downtrend on Euro USD. By the way, I'm using the replay mode for the sake of this example. Let's say that this was live. We don't know if price is going to higher or lower. We just assume that based on this downtrend and based on a higher time frame analysis, price could continue going lower from this point of interest. That inside of this leg up from this low to this high, we have a lower time frame uptrend that we can mark like this. We have a higher high, higher low, higher high, higher low, higher high, higher low, and then higher high, higher low, and then higher high, sorry. So the last leg up that grabbed liquidity before breaking the structure and producing a new lower low on the orange trend was this one. So all of this move up is going to be our main point of interest. Obviously, if there was a Wyckoff distribution, then instead of selecting the last uptrust, we would select the entirety of the Wyckoff range. So instead of having this marked, if we had something like this, for example, as a Wyckoff distribution and then a break, then we will select all of this as our main order block, not just the last leg up. So once we have the main order block, the main level where we expect price to continue going lower from, without getting deep into where this is going to happen from, then our focus is going to be on the lower time frames for when price gets to that level. So when we have an uptrend and we are hitting our main point of interest, that's when we are going to look for confirmations. So ideally, once you marked your point of interest, put an alarm there, sit on your hands, do whatever you want with your day, and only come back to look for a confirmation once that alarm turns on. So once we have our main point of interest marked in our chart, for price to get to this level, they need to create a lower time frame uptrend. And this uptrend is not only from one degree of structure, but rather multiple degrees. So you could have several different structures going into this point of interest. Let's say we have something like this as an example. As you can see, we have an uptrend, and there are not only one but two different degrees of structure. We have the yellow one that started as an uptrend, then turned into a downtrend, then an uptrend again, and now uptrend one more time. And every time this yellow one was broken, but price still managed to make a higher high, that's how we created a new higher time frame structure that is a red one. In order for us to catch a trade that aims to make a lower low on the orange downtrend, which is our higher time frame, first, the lower time frame uptrends that are getting into our point of interest needs to be broken. Essentially, what we're looking for is for a breakdown market structure that will show you the intention of the market. If we have a yellow uptrend and gets broken like this, then the intention of the market now is to go lower. Now, since this is happening from the point of interest, then price is likely going to continue going lower. However, and this is where most people get confused with, breaking this structure doesn't mean that price will continue going lower and make a lower low, because we are still within a higher time frame uptrend compared to a yellow one, which is the red one. So as you can see, the last high low of this red uptrend was this one. From here, the yellow downtrend now could reverse and initiate an uptrend from this higher time frame higher low. So what is the purpose of this new uptrend? There are two things that might happen. Price could either fail to make a higher high and then break again, in which case we will be talking about a new red downtrend like this because we are breaking the structure, or price could make another higher high as long as we are within the main point of interest and then break again. So when this happens and we are very close and at the most premium level of the point of interest, price is very likely going to initiate a bigger downtrend because there is no more premium level to get to unless they wanted to break the structure. In any case, whenever price breaks an uptrend and initiates the downtrend, that's your confirmation to start looking for trade. Take into consideration the higher time frame that could produce another leg up, either to grab more liquidity and then go lower, or to fail to grab liquidity, producing the failed swing higher and then reverse. There is another important rule, which is the mitigation rule. So following this example, let's say we have a breakdown market structure on the yellow uptrend here. And now we have here an unmitigated level. And by a mitigated, I mean a level that broke, left an imbalance behind, and now price is coming from this level to test the recently broken structure. In this scenario, we should expect the same as for when price is coming from a higher time frame level. So you could expect either a failed swing and then continuation lower, or another liquidity grab above this high and then continuation lower. So again, when price is coming from an mitigated level, wait for a second confirmation, wait for the new uptrend that is beginning to form here to be broken one more time, because it could take you out if you try to take a trade from this recently created point of interest. And assuming you have a second break of market structure, then this is your new point of interest. Now, from here, you could choose to either wait for another confirmation and get a very high AR trade, or simply take a trade from this point of interest, because the target for this recently created downtrend with a second confirmation will be to either test this level and produce the up move like we talked about earlier, or to break it directly. But at least you know you have some room to go lower from here that justifies taking a trade. And if you want to wait for a lower time frame uptrend to get into this level and repeat the process one more time, you're going to end up getting a very higher trade compared to the original point of interest, because every time price breaks the structure from a higher time frame point of interest, you create a new lower time frame point of interest that will be naturally smaller and smaller and smaller. Therefore, you will be getting higher AR trades. Now, if you look at any chart, there are always two types of reversals. The first type is when price is in an uptrend, fails to make a high and break the structure, and the second type is when we are in an uptrend, price grabs liquidity and then break the structure. So in any of these cases, the most important part is a change of character. As I mentioned on my Wyckoff video, if you didn't watch it, I recommend you to do it. If we are on an uptrend, when price does something like this, a bigger way down, retracing almost or more than 100%, that's a change of character. Now, this change of character could lead to a break of market structure like this, could lead to a failed swing higher and then break of market structure, could lead to another liquidity grab and then break of market structure, or could lead to a complex Wyckoff distribution. In any of these cases, what you want to wait for is for the second change of character, like I explained on that video, where price breaks again, produce the first bigger swing lower, usually contains increase in volume, and it's telling you that the intention of the market is to go lower. In one of these past week live sessions, we took a few trades. The first attempt to take a trade was a sell from EURUSD. In this case, the TP of the sell was tapped before our entry, so we waited for another confirmation. But after this, not only we didn't have a second confirmation when price came back to test this level, but also continuing higher, breaking my own bias. So even though you have a clear bias of what is price likely going to do, the market can do whatever they want at any time. So you need to be open and humble enough to avoid trying to chase a trade or try to justify why you're taking a trade, or justify your analysis, look for excuses to be in a trade when in reality you're going to end up losing that trade. Now I want to show you another example of a trade we took this week, so you understand how we waited for a confirmation. We are looking here at the recording of the live session where I sent that trade to the group. As you can see, the first target was hit before hitting the entry. So now I'm going to show you after this happened how we executed two trades when price gave us enough confirmation. So at this stage, we were looking for an uptrend here in this moment. As you can see here to the left, that's where we initially were looking for a short. But the bias was changing since price was coming from grabbing external liquidity, and now we had a break of market structure, as you can see there. And now I'm telling to the guys that I'm taking a long right there, setting my limits, or actually market executing. So after this happened, this trade actually hit our stop loss at break even, because price was in profit, but I decided to place it at break even. Then price comes back, takes me out, and then we take a couple more trades. This is the second trade we take. As you can see, after a new higher high was formed, price was essentially making an uptrend, and the target for this uptrend to me was way higher. That means that we have room to move higher from this uptrend. So after that break of market structure, I announced I was taking another buy limit right there. As you will see now, this buy limit had a lot of drawdown. Basically, it almost takes us out of the trade, but it ended up working anyways. This is the trade. A little bit later, you can see it drawdown right there, almost hitting a stop loss, but then into profit again. And after that deep retracement that it made, you can see we have another move higher, breaking the structure one more time. So again, remember, the pre-go market structure is the intention of the market to go higher. I select my point of interest, which in this case is all of this range that is an accumulation, and I set another buy limit right there. And as you will see in just a moment, both of these trades hit the TP beautifully. These are the two trades hitting my take profits. I was hoping for these two trades to go above the high, above this box we have to the left, which was a bearish point of interest. But when price was hitting that level, since I saw a lower time frame change of character, then I decided to close both trades before a reversal.